Okay, now what are we going to do? Well, good morning. Ooh, Fed day, baby. So, welcome to Risk Neutral Trading. This is my virtual trading journal. The usual disclaimers. It's not for financial or trade advice. It is my virtual trading journal. So, I'm talking to myself. The idea here is that I capture all the everything I'm looking at on my video, and my voiceover provides some insight as to what I was thinking. I trade the ES. I use Bookmap, which is what you see here, and IRT, Investor RT. I'm not monetized here, so likes and subscribes and thumbs up and drop something in the chat is great. I stream in 1440p high def, so if it's a little grainy on your side, click the gear icon and you can see it's nice and clear, and I hope the audio is good. The idea here is that I start streaming every morning, every trading day at 0800 as I am now, with a recap, and a setup, review of the upcoming numbers and the overnight trade, the pre-market kind of a workflow, and what I expect will happen in the opening hours in the trading day. And then then the stream is live, continues live until 1500 every day. The idea is that it is completely transparent and accountable. And that's the important part. So let's move right on to that business then, shall we? Again, this is Bookmap. This blue line is just a visual reference that I throw on at every session open. My methodology here is that I keep the entire session in view on the Bookmap chart. It is obviously always in view over here on the IRT. And this is just a visual reference. I can glance out of the left, my left eye there, and if I see that over here on the left side of the screen, I know that I've got the entire session in view, and if I don't, I need to adjust it. The idea being that I want to always have a firm understanding of the context for the session so far. Now, here we have what should be telling for the upcoming day, in case you're living under a rock or have just dropped in from Alpha Centauri. Today is the Fed rate decision for the world famous, oh my God, let's get rate cuts, cheap money, yada, yada, yada. So that's at 1300 today. We do have the crude inventories out, 9:30 like usual, but all eyes in I guess probably the world are looking at the Fed at this point. So you can see that there's been essentially nothing go on overnight. There was a big hoop-de-doo down here from London when those boys decided to step in and do something. I keep my price ladder here at about at 1 point wide and the session in view, as I said. So let's look now at the numbers. And here we go. This is Investor RT. This is investing.com. You see building permits and housing starts were a miss, and that was at 7:30 this morning. And a pretty substantial miss at that. Forecast was 1.370 million. Previous was 1.36, and we're down at 1.31 and 1.307. Big drop. Not a 3-star or a high tier warning, but here it is. Here's here's the accrued inventories at 9:30, but this is the important thing that everybody's waiting for right there. 1300. This is investing.com. It is free. You can filter it however you want. You can look at earnings. You can look out however many days you want to go out, tomorrow, this next week, whatever you want to do as far as numbers. And I like the way it presents here, especially for screen snaps, etc. The other news that I use is news that I use. I'm a poet. Wow, don't know it. Financial Juice, also free. You can pay for it if you'd like to, and you have extra money laying around. If you have extra money laying around, send it to me. That'd be a lot better. I would appreciate it, I promise. Here's our housing starts numbers. Down here is the Fed stuff, and we do have an extra little bonus here on the Financial Juice that doesn't pull through by my filtering on investing.com, and that's that this unrecognized or our risk. You know, who knows what this guy, Trump is obviously, yeah, real fond of his own voice and cameras. So, and the thing about it is you never know what's going to be said. I'm assuming this will be some either huge criticism of Powell and the Fed if they don't cut, which won't matter because the market will be, in auto tank mode. Otherwise, it'll be yeah, I told you so. They finally listened to me kind of a thing. Maybe it could have something to do with Russia. We don't know. That's the problem with the governmental folks at this moment is you never know what they're going to say. So that's an unquantifiable risk, but it can be a substantial risk to the market. So here we are. Yeah, and let's look at the pre-market now and see where the hell we're going to go, I think. Here we are. Here is our overnight, much as you see on the book map. I hope I had the right screens up on the news there. I just noticed that. Let's check. This is Financial Juice, where we have pretty much the same calendar docket over here. The Fed, Trump, FOMC, and this is more of a squawk box. Here is investing.com, which is the typical one that I like to post because it's so much easier to read. And it doesn't have the squawk box stuff, and by my filtering, it doesn't have the administration stuff. I hope I was clear about how that was on the screen. Here we have the ES minis and the NQ mini and my micro composite higher time frame chart. This is investing.com. Jesus Christ, I'm going to go back to bed. This is IRT, Investor RT by Linsoft. The high time frame or the micro composite chart. This is an RTH session, and it's plotting daily candlesticks. Wherever price overlaps, I draw a volume profile around them. That gives me these high red and green lines, which are representative of the high and low volume nodes here in the market in the micro composite volume profile, the most recent one. And then there's things, the micro composite VPOC, etc. These red and green values here, the high and low values, are pushed automatically to Bookmap, as are the session prices. This is the market profile. Now at open, I'll change these all to day session only, and that's real simple. You just click that button and away you go. What we're looking at here is down across the board, relatively light volume. We're, well, it says a percent change of 0.01, and the way that's calculated is, yeah, that's about right. The last price compared to the settlement price. Okay. Now Bookmap, here we go. Here's the micro composite column where I manually enter these values. Previous naked volume points of control. Oh, that's something I think I'll need to do here. And here was our close, and here was our naked volume point of control. Interestingly enough, right on top of the one from the 15th. Can that be true? I think not. I think it should be up here. Let's check and see. It dropped right at the close, which it often does, right at 3 or just a little bit after 1500. Anyway, here's the micro composite column. These are entered manually. I'll look at this in a minute. My workflow is that when a flag or a level is no longer active, I change the text to black. So we close these gaps out. Let's get rid of that story from a couple of days ago. This is the MC all-time high. Again, put in the RTH. Which makes no sense to me because we've got all this value up here. High and low volume nodes. Full session volume profile, which started plotting at 1700 last night. The RTH session, which will reset at 8:30 this morning. And this is my notes column, which is pretty darn important to me. For 2 days in a row, we opened higher out of range. Today, we're not going to do that. Today, we're going to be smack dab in it. The first thing I do, and you'll see the statistics which were input yesterday. I'll do so again today. And these are these just are flags to mark the migrating VPOC. First thing I do is clear those notes, get all that out of the way for today. And then I determine the open type that I expect, and I change the title of this column. Now, here we go again. I hate these things when we're just right on the cusp. The way you determine the open type is the following. There's only 2 criteria. If we opened right here, right now, where would this price be? How would it relate to the previous close? It would be lower than the close. And the previous range, it would be higher, lower in range. And something is really goofy here now. Huh. Okay. I'll be right back. Somebody's at the door. Sorry about that. Okay, so anyway, What we are likely to do is trade up over this close, and that's what irritates me. But what I'll do now is change this title to lower in range. And the reason I change that title every day is when I look at a screen snap or the recording, this gives me a lot of information instantly. Now we have a little question here about this naked volume point of control. IRT is booking it up there, and this is where POC is putting it. I mean, this is where Bookmap is putting it. Mm-hmm. So this is the price, the session price is pushed by IRT. You'll notice there's no indicators on my charts or my investing.com. Or, Jesus, I keep saying that, my IRT. I got to go back to bed here, I guess. I have a POC for both the RTH session and the full session. The full session's a bit darker or more muted yellow. POC is nothing more complicated than just a price, the marker at the price where we have traded the most contracts so far in the session. So down here it's 65 half. We've traded the most contracts in the overnight so far. That's it. The minute one of these other prices is one contract higher than 35.95, that's where that yellow line is going to go. Easy. We have a mid for the RTH. This is red boy here. We have a Globex, an RTH VWAP and a Globex VWAP. We have an IB high and an IB low. They are a little confusing to some folks, but that because of the name, it's a holdover from market profile. What this stands for is initial balance high or low, and in reality, this is nothing more than the high or low of the first 1 hour of the RTH trading session, period. Nothing else over here. Now, let's look at the statistics based on the lower in range. Hey, Panda. Yeah, come on now. I got things to do here, so don't be bothering me now. So we were higher in range yesterday. IRT will conveniently highlight the column. And here's lower in range, where I expect will open today. So the way this works is very simple. The study looks back at 2,000 trading days, continuous contract, obviously. Of these 2,000 trading days, we opened lower in range, 589 of them. Of these days where we opened lower in range, price revisited the overnight volume point of control 84.4% of the time, or 497. So we'll come back over here and we'll go 84.4. And that's all there's to it. And then we just go down the list. There's the overnight volume point of control. There's the overnight mid at 82.2. Overnight mid right there. Ooh, let's not do that. Okay, there we go. Previous close is 73.7. And, you know, this day it's important to really understand that this day is just 100% a Fed show. I mean, that's all that's anybody's focused on. 70.5% is the IB high, and that happens to be, this is the IB low, and then there's a little squiggly green line right under here, which is the IB high. Let's see if we can get it up here at the POC, at the previous high. It never got even remotely back there yesterday, so let's put that one in. Hi, Panda. I see you. Yeah, I know you're down there. My kitty cat is there. She's looking for Antonio. And I always put the initials like this because, by definition, the minute we open this flag, which you can't see because it's under the previous high, but you see the green line and you see the name over here. will automatically go to the top, to the high of wherever we open, as will the low go to the lower, to the bottom of wherever we open today, instantly. And so they will not be up here anymore, or here, or here. Yeah, hold on, Panda. Previous POC, overnight low, 66.9. And I'm going to break off here now to do a screen snap I do every day. What the hell happened here now? So irritating. I don't want to do that. Come on, Panda, don't bother me now. My cat, she's busy rubbing on my legs, and she's going, Dad, this is the time when I expect you to pet me and pay undivided attention here. This is one of our two. What I'm doing now is a snap for the TLab. And do you know what the TLab is? God, I'm sick of that. Well, I tell you. I'm sorry, I'm disjointed here. I'm getting all kinds of pop-ups from this stupid ad blocker crap, which I just hate. It's so irritating. I appreciate what they do. I'm going to have to figure out a way to get away from it, though. It just irritates me. So I do a screen snap every day for the Traders Lab, which is a bookmap Discord chat room started by a guy named Tom B. And I post this. I post the numbers every morning at about 6. And I post this at about 8:20 every day. It just gives those folks in there an opportunity to see all the numbers in case they may not have the same kind of charting. Let's get back to the business at hand here. Tom B in the Traders Lab. It's free. It's a bookmap Discord chat room. He doesn't trade live or call trades, and so there's that. You know, it's kind of a rearview mirror or anticipatory dialogue in the Discord. But I believe Tom's a good guy, and I believe he is genuine. He's reportedly been trading for 46 years. And the most important thing for me there was that nothing is ever for sale, nor are you ever solicited for anything. So I think that's one hell of a start in the right direction. And I don't make the recommendation for any other of the bookmap Discord sites or anywhere else. I haven't certainly been to all of them, right? So how could I recommend them? I have been to 2 other bookmap Discord sites, and they were typical. The second word out of the guy's mouth was trying to sell you something. So take that for what it's worth. Let's get back to the business at hand here, which is to be able to trade. In order to trade with bookmap, you need to activate the trade control panel by clicking this padlock. Select a way you will interact with the application to trade with your mouse. Chart, dome, or both. If you select chart, the only place you can trade with your mouse is here in the active data column. If you check the dome, the only place is the dome columns. And I choose both, obviously, both columns. Then the next thing I need to do is select multi-brackets. And this is what introduces the risk-neutral methodology. This is the smallest package you can have for the risk-neutral trade management methodology. It needs to be an even number of contracts. Then you select the stop for the entire package based on your account risk parameters, other things, however you determine your stop size. And once those have been determined, then the first risk neutral trade or first scale T1 take profit, whatever you want to call it, is already set because it's for half of the package, and it's for the same number of ticks in the positive as the stop is negative. And then you have a runner, the balance of the contracts. If you have 4 lots, there you go. So that's that. The next thing I do is a multi-account trading thingy here, which is that, which is that, which is that. And what that does is, let me continue. After I've set that all up with multi-brackets, I don't need any of the other functionality in the trade control panel. And you'll see these metric values here are replicated up here. So what I can do is confirm the package size, click the button again, I get my screen back, I have all the metrics up here, plus I have cancel and close. And by the way, these metrics are in ticks. So I'm set up now and ready to trade. Now back to the multi-account thing. This is a TopStep evaluation account, and it copies to 4 others. They are all within a couple $100 of passing the profit target and moving to the XFA. My thinking for doing this was to have a complete uninterrupted, transparent, and fully accountable record of this zero to hero process. So that's what I'm doing here. You notice it's real trading, it's live data. You see that I share my monitors, not just the application, so you can see any programs that are open or in use. And there's the clock in terms of hours, minutes, and seconds, Central Standard Time, as all times that I talk about here or that are visible, and the date, which ties up over here. So I think it's about as accountable as you can get, not to mention the fact that each stream is 7 hours long, because I start at 8 o'clock in the morning and I finally shut it off at around 1500 each afternoon. So let me see what I have done now. Okay, well, the next thing that's going to happen is we're going to open. And I think it's probably going to be pretty muted. Typically, I would be expecting an open auction because our inventory is just about balanced out now. Essentially, we were pretty much 100% long, but we've traded back up here. We're right about where we closed, right? There's the RTH close. They're going to monkey around here, and we're going to suddenly be higher in range rather than lower, which is irritating, but because that's where we are right now. I'm still a little puzzled about this thing right here. This is the flag from IRT indicating where the POC was yesterday's RTH session at the close. This is where Bookmap is putting it. It's 2 points, right? So call me a liar, but let's do this just for the hell of it. Let's put this in here and see. That way we can't be wrong, right? We got them both. So this is 16/09/25. I always encode the date, and that's day, month, and year on these levels. And you notice how this is white. If this is revisited, I'll change it to black. And I'm not sure why this is showing such a big session here. I've been having big trouble with this session resetting. We're going to set here now in 30 seconds. I have it configured to reset on session start at 8:30 Central Standard Time. So let's see what the hell happened. There we go. Well, we clicked over and we're early, according to me. According to the clock, we're 15 seconds early. beats the shit out of me. I have set this thing up to automatically, I've set Rhythmic up to automatically readjust the clocks on my computer to be in alignment with their clock, but I don't know, that didn't happen, obviously. And now we've reset, so beats the hell out of me, boys and girls. We have revisited everything. We've taken out that one right here. We've taken out our overnight right here. I mean our whatever the hell the IB something or other, whatever that was. Oh, that's the previous close, right? And I'll start flagging the VWAP or the migrating volume points of control here pretty quick. I'll also open this up to 8:30 and put my visual flag for this session, which should be about there. Okay. Now we're trading up, we're trading up, we're trading up. I'm going to throw this flag right there. This is the migrating VPOCs. What this is for, or why I do this, it's kind of a holdover workflow from the days when I used to keep the about 5-minute increments here in the heat map, and then you could never see where the POC had gone. Obviously, the yellow brick road never stops plotting, and I have it visible over here on IRT. But I used to want to know where it was all the time, so I would continue to put these flags in here. And this, little nit-nat jumping around crap is irritating. But there you are. Now I will reset my IRT stuff. There we go. Now this will suddenly only reflect the RTH sessions. There's yesterday, and here we are so far today. And the same down here. And I do that for a specific reason, which I'm going to keep a secret. No. Not really. Why that goes away all the time, I don't know. I do that to keep the relationship, and incidentally, I think I forgot to mention this. I also plot the MES and the MNQ. Same exact configuration as the other four charts, but just the micros, right? In case, because I push those levels also. Free to anybody that needs them. So if you could use the session prices, let me know. I'm happy to share them. I do with lots of people, so that's not a problem. There we go. All right. 830 to 1600. So let's save that beauty. And let's mosey back over here. And there we go. Isn't that fun? Now, what I was getting ready to say was the following. The value area low differs from the developing value area low or high in that the D, developing, means this current auction. The value area high or low means the previous auction. And if I did not change my IRT charting to full session only after this RTH session opened, the value area high and low would suddenly be representing the overnight, which is just concluded. And that would confuse the folks who use these levels. So there you go. And remember, these are 1 point high and real narrow over here. not still convinced that this freaking volume profile is working right. It seems to be a little off. And why that would reset 15 seconds different, I have no idea. I have a special task on this computer to reset the clock in accordance with the UTC time server every morning at 7 o'clock. I have configured Rhythmic to reset this computer clock or resync this computer clock with its own every 2 minutes. And it still can't get its shit together. I don't know. And I never had any problem with this thing resetting every set. You know, what the way I did have it configured was to reset at time, 8:30, 0 seconds, every day. And this would be, you know, if it were at night, it would be 2000. So this is definitely, you know, it's 24-hour time. It hasn't worked at all, and the session start seemed to work a little bit. Now, if I shut this off, what'll happen here? I don't know. I guess it stays the same. At least it's doing this automatically, maybe a little early, maybe a little late. It's at least resetting automatically with this session start. With the RTH or with, you know, at specific time, it hasn't worked worth a damn. The thing that worries me is the IB high is correct. The IB low doesn't look right. And if you look at over here at, if you look at Bookmap or IRT, I mean, you'll notice that there's a little bit of a tail down here, which doesn't exist really. And the it goes right down to, and as it should, the IB low. So, yeah, beats the hell out of me, dude. I don't know what, I think I'll just leave it restart every morning at session start. I'll try it tomorrow now on the time and see what happens. And then if I need to throw my toys out of the cot, I can do so. Okay, so here you are, flatline. Hurry up, trade, quick. These retail guys are clicking like crazy, and they're just going to get, look at this mess. Look at the levels, how tight this is. You know, granted, we're only 7 minutes in. But look at that mess. Who's trading that? And you can bet your ass there are plenty of people that are. And they are just, you know, contributing to the college fund of the institutional guys, in my opinion. The eyes are on the Fed. Who cares what Trump's going to say after the fact? I think it'll just be some, in my opinion, unless he comes out with something to do with this thing they're trying to put together with Russia or anything good like that's no problem. But he tends to be, you know, pretty caustic and pretty negative about people. So I don't know what he could possibly say that would be adversely affect the market after or affect the market differently than the Fed rate decision and their outlook. Now, it's important to know that this is the quarterly outlook meeting where this Powell's comments and the minutes are going to be real important because everybody's pretty much okay. Yeah, it's a given they're going to get a 25 basis point cut today. But the big question on everybody's mind is going forward. And that's what will be kind of hinted to, suggested at, maybe not, you know, maybe articulated directly, but for, you know, how the Fed they play cagey. And let's hope they get something stable in policy before this huge shift to put the Fed under political control, which is the whole was absolutely the reason it was established, that central banks are established, is to be politically independent. And that's the last thing that that these guys want. Navarro, whoever that jerk off is. Sorry, but interesting. I was reading an article about Bissett, the Treasury Secretary. He had his own hedge fund and lost billions of dollars. Billions of investors' dollars were lost by our Treasury Secretary's hedge fund that he managed and ran. That was his job before being put in as head of the Treasury. Jesus. I guess it fits, right? I think Trump's been bankrupt 13 times or some crazy shit like that. It's amazing. If you or I ran our lives like those guys or the government, we'd be, living in a box under the highway someplace. I mean, it's ridiculous, completely ridiculous. The separation, or separation. And the difference in standards. The standards that apply to you or I, or the standards that apply to those people put on themselves, like Marjorie Taylor Greene was worth about 150 or something, or 200,000 or 300,000 or something like that when she got elected to office. She's worth about $5 million today. Now, how do you suppose that works? She's on a couple of committees which decide, important things, investment, government contracts and stuff. They trade openly and frequently, and their salaries are $150,000 or $200,000 a year. It's virtually impossible to acquire that increase in wealth honestly, legally. And nobody gives a shit. Nobody says a word. And that's just one representative, because I saw something about it on Financial Times the other day, recently. It's just crazy. That's why I think just keep your nose down and your ass up and you're all set. And Antonio, bon dia to the man. La Banco Federal, oye. Whatever that is. That was about every language I can imagine. Aujourd'hui, if I throw some French on there for you. The Fed rate at 1,300. Powell's speech 1330, and then Trump has come out with he's going to have some Fox News something or another hootenanny at 1,400. But he's in England now, so I'm hopeful that it'll be something that he'll have something positive to say about Russian sanctions or something like that. But we'll see. Obviously, all eyes are on the Fed rate decision today. I can tell you, if they don't cut, you better have your shorting shoes on. I think I've just about gotten that code worked out for the back test on the world famous IBF setup that Rod put forward. I'm spending a lot of time on it. Yeah. Kumuta. Yeah, I'm telling you, I'm a donut. But I mean well. I'm kind of like a puppy, you know. Make a mess once in a while, but hard not to love. So we're scooching this IB lower, and I'm going to call this thing revisited. I'm still not quite sure what that was about. But little discrepancy there between my flagged previous naked volume point of control and where Bookmap had the POC from at the close of yesterday. I'm not sure whether that's, I'm relatively sure that's dependent on this RTH column here, which I've been battling with getting to reset. It seems to be resetting pretty close within a few seconds, 15 seconds, say, having it set for, I've had it set at session start, including today. Now I rolled it back a few minutes ago to the way I used to have it for years, where it would start at this specific time, and I'll see tomorrow if that changes, back to not resetting properly. I've also set Rhythmic up, whether you know this or not. You can set Rhythmic up to, oh, you don't worry about that anyway. Never mind. Yeah, you can set Rhythmic up to you have to run Rhythmic as the administrator, and then you can set it to reset or resync your computer clock with the Rhythmic clock every 2 minutes. So we'll see if that has some effect. And of course, after about 10 minutes, it doesn't make a damn bit of difference anyway. The volume profile is pretty much smooth out. So here's the IB high. There we are at the volume profile high, and here's the IB low, and there we are. So it looks pretty good to me. This looks good from my house right now. Take a run around the roses here. Do you suppose they're waiting for something? Look at this market profile. Or down here, even better yet, the micro composite. Pretty ridiculous. Yeah, it's been as obvious as the nose on everybody's face that this whole Fed thing today and this week. Now, this week has got some other stuff that I'm sure you're aware of, but after today, first of all, at 9:30 today, we've got the EIA oil crude inventories, which might have some effect if you pay any attention to that. But most importantly, the Fed number today. However, tomorrow we've got initial jobless claims, and Friday is one of the 4 huge triple witching options expirations of the year. And that's this Friday. So it's been one hell of a week. Look at this volume. Ooh. A lot of buying volume down there, huh? Let's see, speaking of volume, what I was looking at here. Speaking of volume, what do we got going on over here? A little bit light, about 84% for this time of day, and we're just about 2.5 points on the ATR, sneaking up a little bit. I frankly don't imagine that there will be any kind of a trade opportunity between, in my world anyway, between now and the Fed thing, which is 1300. And I realize that's ultimately boring for stream watching, but after all, this is my journal, and I'm trying to stick to my guns here and hold my ground on my discipline and my procedure. I'm about over it, though, I'm telling you that. This next trade, if I get one more trade in the book and get these 5 contracts over into the XFA, I'm going to call this IB statistic a done deal, and then start trading based on more normal idea. I mean, still following a vetted trade about the entries for the IB, IB failure or IB continuation, but able to be more flexible with my trade management rather than just rigid to the 2-lot risk neutral package, which I have to do until the vetting process is over, because I wouldn't be comparing apples and apples if I didn't do that. So, but I can tell you it's about as not a lot of fun, that's for sure. And that's why I'm so, working my eyes into the burn holes in the blanket here pretty quick on this backtesting thing, so I can rely on that and not be working on vetting these trades in the trading day. Okay, let's just see what's going on. The stream is trickling along here. That's a good thing. Welcome if whoever's passing through. Get a lot of views and stuff, but don't get a lot of clicking or a lot of input. Yesterday, a fella asked a few questions in the chat, which was around IRT stuff. So that was nice. But it would be, I don't quite understand that. If I go someplace and I spend a little time listening to whatever that person is talking about, I don't get the point of not clicking the thumbs up. I don't understand what that seems to be quite a cherished thing for a lot of people to do. And I'm not sure why that is. It is what it is, of course. But, I figure if the person's, if the person has put out the effort to present a stream and put all the things you have to put together for that, it doesn't cost a penny. I don't understand, subscribe, thumbs up, whatever. I don't get it, but I don't, I'm obviously a different cut of cloth than I suppose the majority of the internet world, YouTube world, whatever it is. And then on the other hand, they all flock in and follow some, influencer and lose their ass. It's pretty funny to me. I find it a strange dynamic. Or, Elon Musk they think he's some sort of messiah. It's incredible. What a useless, complete douchebag. Boy, Tesla really fell out of bed. They had to come back a bit, I guess, yesterday or day before, but man, they are down big time, like 70% off sales in the EU, and some pretty amazing stuff. And I have no use for it. What people don't, I guess it's normal, but people don't tend to look past the end of their nose. They're so excited about wanting to be a hot shot and drive around in a Tesla for some sort of identity. If the United States suddenly all bought electric vehicles, the entire electric grid would fall over in about 35 seconds. It's impossible. It would be absolutely impossible for that to charge those cars, especially when they all charge at night, typically, when the grid is the least functional and there's none of the other contributing types of generation, solar or wind, or wind maybe, but solar for sure. It's the weirdest thing. And the typical grid, like here in Texas, they can't even keep the grid up without falling over when it gets cold, because people turn their heat on. It's just really strange to me how short-sighted some people get, or some, the population can get. I find that really weird. And I don't know whether it's, I don't know. I don't know what to say. So we're open. That's pretty cool. Forgot to throw that flag on. Now it's in there. We are just rotational here, expanding a little bit both directions. We've pushed our IB up. We've pushed our high up, our IB low down. We're just a little bit outside of yesterday's value area on either side with the IB so far, and pretty much rotational, which I would expect to continue until about 1300, and then, all bets are off. Everything seems to be streaming along here. That's good. We're fast approaching the 9 o'clock hour. Remember that the EIA crude number comes out at 9:30, in case anybody's looking at that. It may have a little more impact. There's been an awful lot of conversation about ramping up sanctions against Russia. And I believe Ukraine has smacked their refineries and a couple of export hubs. So the crude inventories are not building. America, of course, has done a flip-flop and on Venezuela. And did you notice how the misdirection that happens in this short news cycle? There's a big story about something that some people in the government or wherever don't like. So suddenly we have an invasion fleet, steaming to Venezuela, and they shoot a poor boatload of fishermen, quote unquote drug dealers out of the water and kill them all. And then absolutely nothing. Not one peep, not one headline, not one anything has been said since that day that I've seen on Bloomberg, Wall Street Journal, Financial Times, BBC, CNN, the typical news places. To me, it is just it's a very thinly veiled, typical stage magician trick of misdirection. Everybody's making a big thing about the Jeffrey Epstein birthday book and blah, 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 blah. And suddenly we have a fleet off the coast of Venezuela. Then nothing happens. Then nobody says another word. And the whole Venezuela thing puzzles me, because about 45 days ago, we were imposing an additional 35% tariff on any country that would purchase or import Venezuelan oil. And about 3 weeks ago, we issued a license to Chevron, and they imported about $750 million worth of oil in like 2 weeks from Venezuela to the States. It's pretty confusing to me. One of the things you may not know about oil, which I happen to a little bit because of my previous career here, America is the largest by far exporter of crude oil and liquid natural gas, much more so than Saudi Arabia or anybody else. yet we still import a huge amount of oil. And the reason for that is originally when all of the refining infrastructure was built out in America through the 50s and, into World War II through the 50s, 60s, and I guess into the 70s, America's basic crude production was sour crude, heavy sour crude, and that's what we can refine in our refineries. The new oil, all the shale and all of that crap that they're producing by fracking and all the things that they're doing to the groundwater, we can't refine it in our refineries. So we export it to countries who have newer refineries. And then we import sour crude. And nobody says a word. None of this, government, energy, any of this drill baby drill shit. God, nobody says a word about that. And for us to convert or update our refineries would cost trillions of dollars and take 25 years. Nobody says a word. It's the strangest. We are very definitely the largest exporter of crude and liquid natural gas. In the last year of the Biden administration, America produced more crude oil than it had ever produced, licensed and produced more crude oil than they had ever produced in the history of the United States. And took over number one spot in exporter of liquid natural gas. Much more so than Saudi or anybody else. But all of that just goes missing in the narrative, in the short news cycle narrative. And it's really strange to me. Very strange. Disappointing. I remember the days when the news was the news, when you could depend on Walter Cronkite and those kind of guys that they did investigative reporting and journalism, and it was the truth. Now it's just so bizarre. This whole thing about rate cuts, right now America's inflation is almost double what the target rate inflation rate was. Unemployment is zooming up. Those are both bad signs for the economy, and they are both the key metrics that the Fed is charged with. Those are the two mandates that the Fed has to deal with. Neither of those speak to a rate cut. And all this market and the administration can talk about is rate cuts because they want cheap money so that their buddies and themselves can make more money. They could care less about the American people. Can they afford to eat? Do they have jobs? It's the worst job market in America. It's the hardest to find a job in America today. This is per the Financial Times. As it was in 2003 or some ridiculous period of time like that. Those numbers, I don't know. I just have to read them. I certainly don't know. Haven't figured them out, but it's crazy. And all that any of the Peter Thiels and those guys are squawking about, is cutting rates so they can get cheap money, so they can just keep borrowing money and doing what they do. Weird. Pretty much all of it is exactly opposite of what the campaigning policy was for the current administration previous to the election. It's weird, really weird to me, and how short the people's memories are. That, I think, is probably more shocking. So here we sit, boys and girls. Antonio. Panda was in here singing up a storm for you, but she was a little early. Now she's passed out in her bed. She got pretty disgusted with me because I was too busy to stop what I was doing and go give her some snacks. Red across the board, down 0.04 on the NASDAQ, or on the ES. NASDAQ's down 0.1. We're pushing the bottom of this, pushing the bottom of the IB here. Right up against yesterday's lows. And it should be noted that by the way I draw the micro composite, which is I'm going to stick to because, you know, I see some folks that seem to change it around from time to time. I want to be consistent if I can. This is the micro composite VPOC. We gapped up and we didn't close the gap here. We closed it by about 2 ticks here yesterday, and today they're down a little bit, and I'm talking about this gap between Friday and Monday. So I have not extended the micro composite VPOC. I mean the micro composite volume profile, because my workflow says wherever price overlaps, that's where that goes. And then when we start having a series of overlap over here, I'll start drawing those, which I could start to do now. But this is the current MCVPOC, which is 64.49 or 66.49. We did not touch that Monday, Tuesday, or here we are Wednesday. I noticed that Tom had drawn something different. I don't know. He's been getting pretty creative with this thing, and that's great. And that's great. It's just whatever makes sense, I think, for you and for whatever. Here's the high volume node. There's the POC from the 12th, MCVPOC from the 12th. And would not surprise me at all. We got pretty close to it here if we take that out today. I would suppose they're going to trade it down and get in position for what I would expect to be a big up move on the Fed cut, even though it's a baked in deal. And it's now there are a lot of people that are, you know, talking about that buy the rumor, sell the news. So maybe that's what's going to happen. One way or the other, your goal or your prime directive as a trader is to protect your account, and you can only do that with risk management, proper use of stops, absolutely hard fixed stops, which are server side, not your computer side, and risk management, meaning going into a huge number like that, you better be flat or be flat unless you're way in the money. And even at that, I think flat is the place to be. We're only 14 handles wide here so far in the first 37 minutes, right? Pretty tight range. Levels are stacked up. Got some liquidity parked around here. Last night, what was that one? Pretty interesting. 66.75 at 15. Well, at about 1500, a little before 1500, about 1458 yesterday. Here you go. Ah, damn it! I do that every time. About 1458, about 1458 or 1455 or so yesterday. We had 1,201 contracts sitting here at 66.75. That's a lot. That's a whole lot. Yeah. And right now we've got quite a bit of liquidity piled up here on either side, actually. Looks in my opinion to be heavier on the ask than it is on the buy. If you just eyeballing it, we've got hundreds all the way up to here. Look at how this profile is thicker here and much shorter across here. I don't know. Whether that's an optical illusion or what. If you look at the order book, let's see what this says. The average, oh, look at that. The average size of the ratio, it's the ratio between the average size of the limit orders on the bid versus the ask. The ratio of the average size. So that would be measuring the, well, that seems like a completely useless number to me. I couldn't deal with it. It doesn't make any sense. What I would imagine is, what it's getting at is there's more liquidity on the ask than there's on the bid. Well, that's pretty obvious. Look at there. I don't guess that's a big secret. Down we go. And we're at 910. So we have 930 will be the IB will be set, and crude inventory will be out for whatever that's worth on today's, in this particular market anyway. What else we got going on over here? Let's just check. So the Bank of Canada cut 25 basis points. That was pretty much understood to be the case. What do we got here? Most all Bank of Canada stuff. Market on open imbalances. Pretty big imbalances last night. 1.3 billion and stuff like that. Always surprised. Those numbers always surprise me. Next up is the crude at 930. They're expecting, previous was 3.939 million and forecast is 1.4. That's a huge drawdown in inventory. This is inventory on hand in the American refining system. And then the world famous Fed rate decision. This is the big decision or thinking that everybody is so concerned with now. Everybody's pretty much baked in that we're going to get the 100% rate thing. I'm sorry, down here. And then here's the statement, and then there's going to be at 1400 is the Trump on Fox News thing, unless that's changed. No, there you go. Speaks on Fox News. At least Financial Juice kind of tries to pick up these more extemporaneously scheduled things, which could produce potential risk. So that's pretty handy. Look at this iceberg trailing along down here. What do you suppose that jerk is trying to prove to anybody? 7 contracts. Obviously, he could have hundreds down there, but still pretty thick up above here, eh? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, about 22 price levels. These are all points, remember? So not ticks. about 22 points worth of 100 lots, essentially, give or take. So what would need to happen for a liquidity run? Well, if somebody threw a market or threw an order in down here for, you got 2300s, right? So that's 2000, let's call it. If somebody threw an order in down here, a buy order, and came across the market to hit or lift the offer with 2,500 contracts, they take out the first 20 levels of price. That's a liquidity flush or liquidity vacuum, or however you want to call it, but that's how it works. The same way around. Now, coming the other way, what have we got? 1, 2, 3, say, call it 10. So if somebody over here decided they wanted to get aggressive and come across the inside market and hit the bid with 1,500 lots, they take out 10 levels of price, or 5. As I understand. I mean, that's the way I look at it. And look at this mess. Talk about no meat on the bone. I have a range requirement. We've already talked about, and I have, I think, shown. This is the 2-lot. This is the minimum risk neutral trading package. It's a 2-lot package because it needs to be an even number. The reason for that, the risk neutral scale is for the same amount of ticks positively as the stop for the entire package is negative, and for half of the package, so it's got to be an even number. Divide by 2. And then you have the runner. Basically then, what happens is you take off half of your size, and the trade is risk neutral from the minute this is achieved. And the runners and the volatility. So that's the bracket. And how does that then figure into the trading? Well, another one of my rules is that I need to have a range requirement. And that means I need to have an unobstructed path from right here, from entry, to this first take profit target, where I am then risk neutral. Now, some people are progressing on past that and singing the praises and the joys of not taking off half your profit potential, but I'm sticking with this because I think it's the best way to get going. So the range requirement, well, that means if I am to have an entry under any setup that's valid, I need to have a minimum of 3 handles, because that's what the range requires. The first profit target is 12 ticks or 3 handles. Unobstructed. Obstructed means any of these levels or lines or heavy liquidity. And there is no point here in this entire range where we have 3 points clear. So if you think that putting your account at risk is a good idea in this environment, any one of these price levels, price has a very high probability of reacting opposite the way you are, the way you're betting. I think in this environment, and I've been saying this for a while, only A-plus trades, only with clear vision or a clear, rational thought that you can achieve your profit target. Remember, the goal of trading here, our goal of this trading is not to scratch. That's just the psychological, that's like the aspirin or the, the ibuprofen on the hangover, that's all that's about, is to take off that psychological pressure, so you're suddenly clearly thinking the market. You have no more risk to your account. But that's just the scratch. If you want to, just putting on trades hoping for the scratch is absolutely the wrong philosophy. You've got to be planning for the A+, which is 2 years profit target. Now, for me to put a trade on, I've got to have a rational, clear path to 12 points, because that profit target, that first profit target right here, is 48 ticks. That's 12 points. Now, I will have picked up one more here, so that's, of 12, so that's a total of 60 ticks when this whole thing is, when I take both profit targets. But I'm, to take a trade to figure, no, I think I can get my scale here, and then I have no clue what's going to happen after that. I don't think that's a good idea. I don't think that's a prudent, I don't think that's the right way to put on risk or put your account at risk in this particular environment. So that's my story, and I'm sticking to it. What's our context? Remember the visual clue here, or cue. Just a vertical line at session start, nothing more, nothing less. Only for me to, so we, up here, mean reversion to here, we've traded down to here. If, somehow or another you had that as a vetted trade and you took it, good for you. That's 75 to 61. That's 15 handles. But boy, oh boy, did you have a lot of work to do to get through all of this. Let's see. So you did have, if you shorted right here at the eye, you did have more than the risk neutral scale to the mean, which is POC. I mean, essentially that would be just a mean reversion trade. It's got nothing to do with the IB or anything else. So you could be scaled, but you had developing value area high, ETH high, all in the way here. All places for price to react against you in the opposite direction. Worked out fine. I hope you did that. Hope you did that. I look forward to the time when I'm not so bound by this. Now, from my point of view, in keeping with this as my trading journal, I am really, really, really conscious of the fact that I am bored doing this big time, and have to be very, very on guard to not make some stupid, oh, to hell with it, just YOLO trade or something like that, because I've been vigilant with my discipline here for a long time now, 6 weeks, more than that. And I want to be, I don't want to have this end. Of course, the outcome of the next trade is always 50-50, and I realize that. But my contention is, and has been for some time, that the only setup or trade to put on is that what I would consider to be the most recognized A+ one I might have within the two IB trades. And so I'm real vigilant about making sure I don't FOMO or just YOLO or, no, screw this, I'm going to throw it on and go to bed, you know what I mean? That would be real disappointing. If I do everything correctly and it looks like the right trade and then it's a stop, that's a completely different thing. That is not a bad trade. That was a good trade, and the outcome of every trade is only 50-50 because why? This is a binary market. It only goes up or down. The statistically proven fact, the outcome of the next trade is 50-50. It's like a coin toss. So there you have it. It's like FOMO, same way I am with FOMO or revenge or any of those kind of things. It's just, I've had to up this boredom kind of thing, or this I'm over it thing on the vetting, and why I've been just burning myself out on the off trading hours, trying to getting this backtesting thing absolutely nailed down so that I can not need to do this. I mean, I can backtest 25 days worth of data in a second with IRT. You know what I mean? Oh, that'd be pretty interesting, actually. Let's see how long that backtest would take. This is what? This is the 17th, this is the middle of September, so 6 weeks would put us at the 1st of August. All right? So let's see what a backtest. This is the backtest deal here. This is something I built. I don't know. Antonio, you could do this on IRT, on your, whatever the hell it is you do, Trading View. Come on now, be nice. What I've done here is create a couple of custom indicators. This is the IB high, IB low. That's not that's a thing. That's not a custom indicator. It is a custom indicator, but it's also a session statistic. Then I created a indicator for the range of the pullback. This would be the high of the pullback and the low of the pullback. Looking at a short, looking at an IB high failure, which would be a short trade, and then this would be 1 point either side. The thing that in Rod's in the static methodology or the logic is that after the IB is the steps go like this. Why isn't that doing? Oh, wrong button. Sorry. Steps go like this. Oh, and these lines all start. These levels all start. Indicator levels all start at 9:30. So I can easily visually backtest this also. So the first rule is that the IB high is exceeded by price. So here's 9:30. I have it coded in such a way that price comes up from the bottom The open is below the IB. The close is above the IB. In my opinion, that takes out. That's the criteria I have. Obviously, over here, it's exceeded by the highest exceeds the IB. The high, right? But I'm thinking this is a better approach. Then the next rule or next step in this process is that price pulls back within this range. So this would be the first one. And then the third, or the trigger to sell, would be that price reapproaches the IB high and gets within 1 point either side. So that would effectively be, there's either here or here, but here by my code is the IB statistic. Here's the pullback into and through the range, 3 to 5 points. And here we come back up and approach back up to the IB high within 1 point either way. Short. You would scale, and you might stop, you might not. There's a couple of places down the road. This is day before, whatever day it was. This was Monday. That's how it works, and then the code is supposed to do that. And what I was getting ready to do here was this might not produce the correct result because of the rules, but it will give you an idea of how long it takes to do a back test. So we're talking about 6 weeks. 5 6s is 30, right? So let's make it 30 days back test. Okay, and it's for the ESZ contract, 2 lots, RTH session only, producing these reports. Okay, ready? Boop, all done. 1 second. Now this is complete horseshit. It's profit target of net profit on those rules is $32,000. 337 trades. So that's 10 trades a day. That's ridiculous. Yeah. So let's see what did we do here. Largest winning trade is crazy. Should not be more than. This should not be more than 750, and this should not be more than 300. So that code didn't work and worth a damn. But you get how long it took to go through each one of those bars and test all of these rules. And then you can go down here and you can see the outcome of every trade. And if I do this correctly here, you can see the outcome of every trade and whether it was a scratch or a stop or a full profit target. There's the short. There's the T1. There's T2. There's $750. On and on and on. And that's how long it takes. So once you have that done, now the thing that's nice about IRT, and I can only speak to that because it's the only software I've been able to get this far with. After you've figured that out, you can do what's called back test and then forward walk, which means I would go back to say from a year or two or how far back I wanted to go, up to say June, and backtest that, and then optimize that backtest. So the system itself, the program itself, would optimize the setup rules and this and that and the other thing to get the best result over that backtest. And then you do what's called the forward test, which is you take the optimized results and you apply that wherever it went. You apply that optimized results to a different, more recent period of time. In other words, from July through September. So you see how the long historical optimized strategy what results it would produce, and then you apply that to a unknown or not tested nor optimized period of time more recently, and see how it would be, how those optimized results would perform in the current market. Pretty cool. And I'm still struggling with the freaking rules, so you know. The way it should work is, let's look at this one. This is the IB continuation. These are just the rules, right, that I've built. And essentially, this is a flag setup, and then we have the long rules, and then the short rules, and a couple of end of day. You know, if we're still in a trade, short end of day it closes, and long end of day it closes, and then these are the two entries. And let's look at not so long a history of time. Let's go back a couple of days here. Yeah, 5 days, why not? I don't know. Who knows I don't know what the results will be. I have no idea. And you back test it. And there you are. Lost money. We had 5 trades, 3 long, 2 short. There you go. 700. Now this one I know is correct. So the maximum win is $750 and the maximum loss is 300. Now that fits exactly with the parameters of a 2-lot, the 3-point stop, 3-point risk neutral T1, and a 12-point or 48 tick T2. So these are I know IRT only does this in dollars, not ticks. So, but I know that 2 lots for 24 ticks is $300 and 750 for the total for 60 ticks. And then you can, if you want to, you can also go down here and look at the individual trades and see what they were, what time they happened, when was the T1, when was the T2, what was the result. There's a full stop, there's a full stop, there's a full stop, and there's a scratch. So it's one winner and three full stops and a scratch. Now that's a really short period of time, and you can also see that it's only got a 20% win rate and all the other parameters about it. So why I'm so diligent to try to get this working properly, so I don't have to do this nonsense that I've been doing here with in the live market. Another thing I was thinking about, and the reason I set up these custom indicators, you can go back through days. You can come on, you son of a bitch. You can just scroll back on your charts through days and manually look at these things and see if, okay, there's my entry, there's my stop, there's rule 1, there's rule 2, here's the entry, did it work out? Yes, it did. You can manually do it, because I was getting pretty frustrated with this backtesting story. And I've backtested a lot of stuff previously, like this one, but not with as specific a rule structure as this IB failure. And I like it. I think it makes a lot more sense to have a structured set of rules, rather than as I had done them before, where it's like this, and this happens, then you get in. Whereas in this rule-based setup, this rule can happen, and an hour later, rule 2 can happen, and then an hour later, rule 3 can happen, and then you get in the trade. That's how I understand the correct approach would be. And we've had a VPOC migration lower. So Antonio's rich now, because that's his favorite. Had an interesting conversation here in the stream from a fella yesterday about the dome on IRT, and Jigsaw, and he was thinking that the dome was quite lagging on those as compared to the dome in Bookmap. His opinion was that it's much more accurate and quicker, faster, and I wasn't real sure. I've always kind of looked at IRT as the gold standard for my data, mainly because it's also pushed, you know, all the back test and historical data is from DTN IQ feed. That's one of the reasons I think that the back test is a good idea. Okay, so did we? Yeah, we did, and I was busy talking about back testing, but it looks like we just took out by a tick right here the IB. So yes, we did take it out right there. So the IB statistic is taken out to the low side. We had a VPOC migration. Does that set up an IB failure? We've got the IB stat to the low side taken. The problem is, there's your pullback. Here you test the IB, and now you're trading back up again. That would be signaling the IB the IB failure. The problem is that here's the mean. Suddenly the mean jumped right down in your face. Yeah, that's a pretty confusing one there. Pretty confusing. In case you're not aware of the IB statistic, it is an old-fashioned market profile, well known, well understood, that there's a greater than 97.7% probability that the IB low or the IB high will be exceeded by price at some point in the balance of the RTH trading session. You see how fast it can happen. There's 930, right there. And here we go again. That, by the rules, justifies or validates the IB statistic in a matter of seconds. Now what are we going to do? We're going to have this context is essentially down. Was rotational, now it's been selling off. We have an IB, we have the VPOC migration lower. We have the IB statistic to the low side taken, and then, but this part right here is muddies the water. If this had not migrated lower and was somewhere up above us, this would be there's the statistic, we test up, we come back down, we don't get anywhere, and we start to trade up. This would be an IB IB failure trade back towards the mean. And there was not range. Now we have them both coming down. So is this a spot to throw on a short? Trading in the direction of the IB continuation? Bees, I don't know. That's a big I don't know. Just standing here, I would think that that's a relatively good trade. Let's just imagine that we take a short right here. That's 66 quarter. Pretty easy. The problem that I would have right here, right now, is this is the VPOC migration lower, and at what point is that diddling in the middle, right? So remember that this is the most traded price so far in the session, and now confirming in the entire session from 1500 or 1700 last night. What's that mean? It means that this is the most likely place traders going to do this. Boy, would I like to slap one on and get out of here, but I'll tell you what, I don't think that's a good idea. Now, if you short it up here based on the VPOC migration having nothing to do with the IB trade, You're not scaled yet. Looks like that's going to happen. There you go. No, not yet. This is basically 63.5. So yeah, I guess you'd be scaled right about down here. Pretty tight. No real reaction to crude, as I was talking about. And here we go back and forth over the IB, over the VPOC. Well. Now we're going to get someplace, looks like. There's 61. We're down to 60. I still haven't fallen under that. Now we get under the IB low. Is it going to go? I don't know. I would think, given the fact that both volume points of control have migrated lower, that would suggest to me, and we have basically a context that's kind of looking lower, that we're going to be an IB continuation to the low side, but that's not really it's not what I was expecting. We are getting more directional on the profile rather than just rotational. That's for sure. And we have the ETH low down here below us. I don't know. I don't really know what to think at this point. And it isn't really a trade, confirmed kind of setup. So we're at, what are we doing here? We're trading about 8,700, say. Don't really have a lot of room to move here. A couple 3,000 contracts up here. We could bring that POC back up. These are all areas where you would be pretty disappointed with life right now if you got short, eh? That's the problem I have. Range, requirement, POC. Yeah. I don't want a YOLO here. So I'm going to refill. Get ready to trade, Antonio. I'm heading out to the kitchen. Well, it doesn't look like I missed anything. Very definitely a consolidation being built here, right? Got a fractal, as Tom would call it. And I suppose a short is probably in order. Looking for this overnight low. But I'm a little spooked by that, actually. Look at this. Look at this NQ, boy. That's about a perfect profile, is it not? And I was just thinking, well, I should short that. Yeah, this is now a real cluster. This would be what the fellas would be calling a bar trade, breakout and retest, but breakout and retest from where to where? Yeah, I'm going to be prudent here. And eat my homemade sourdough bread that was just fresh baked this morning. Well, I have no idea. I guess what you could say they're doing is mean reverting around this little fractal. Got nothing to do with my world. This is not an IB continuation or a failure trade, because here's the POC. That's the target. By definition, the IB failure trade is a is a mean reversion. Well, there's the mean. Now what are you going to do? I think it's a communist plot. So I think they're picking on me. These guys know where my orders are. You see, they know what I'm looking at. That's how it works. I'm sure of that, you know. The entire market is looking at my stuff. What the hell are they doing? There's something going on. Let's look at the news. I've gotten to a point anymore in this environment where the first time I see anything happen on the charts, I immediately go to the news, because there is so much random, unexpected random risk in the market that I'm spooked, man. I'll tell you that right now. What is this going on? Remember what the conversation I was just talking about with crude oil? The fact that we export and that we can't produce our own oil. Well, there you go. Crude exports rise to the highest since December 23. But here's the problem. Net imports of crude fell to a record back in 21. That's not good, because we can't refine our own oil, and therefore we need to. This is not a good thing. But it confirms what I was saying. We have the huge exporter of crude oil, having nothing to do with drill baby drill. In fact, our drilling is way down because the operators know that would be a disaster. It was a disaster the last time he tried it, and it would be a disaster this time. We don't need a glut of sweet crude. West Texas Intermediate, WTI, or Brent. If I'm not wrong now, this is why we are importing such a huge amount of oil sands from crude from Canada, because it's heavy sour oil. You notice that crude report didn't have anything to do with refined products. Boy, this is sour. Sourdough bread. My wife is just unbelievable. I don't know how the hell I got so lucky. Thank my lucky stars, I'll tell you that much. Well. So let's see where we are here. We're at 69.75 is the low. And what's our IB high here? 67.75. Huh? 59.75. There you go. So we're about 15 handles wide on this range now, boys and girls. That's not a lot. For example, there's over 100. The IB's over 100 handles wide on the NASDAQ. $436, $540. Almost. Okay, call me a liar. It's 96. Just the IB. I actually used to trade the NASDAQ. Wondering if I might lean back that direction again. That was not any kind of a structured trading business, though, of probabilities. That was gunslinging. Or more of that. Not certainly not probability based. Which is, I believe, the correct way to have a trading business. Can they break this thing out and go one way or another? Absolutely. Will they probably get down to the overnight low? I suppose so. If you notice, it's 66.9% of the days where we opened. Okay, and I just wanted to confirm something. The minute I said that, I went, oops. Yeah, so here's our open, and here's our close. So we did definitely open lower in range. So there we go. Somewhere around here is range. Wherever, well, up here is where it is, yeah. Or way up there or somewhere. Oh yeah, way up here. And I think this is a previous low, maybe? No, developing value area low, okay. I'm thinking whether I'm just going to reset this damn, restart back to the session thing like I had before, and who gives a shit? What would be ideal? But I don't know. I guess they can't do it, or don't care, or whatever. If you could set this for your RTH and this for the ETH of the full session, so it starts at 8:30 and it ends at 1600, and stops plotting, that would be great. Just like IRT does. Like here, this is the previous ETH or RTH. There's the one before that, and here's today. Now, if I change this to, I'm not going to do it because that'll screw up the next push of all the levels, and everybody will go, what the hell happened? Oh, wait, I can do it over here. Okay, here's the RTH session, right? So there's yesterday and here's today. Now, if we go like this, boom. Here's the RTH, here's the ETH session, and here's the RTH session. Simple and clear. Right here. Had a lot of things going for it. For me, the big advantage will be if I ever get my shit together with the back testing. And am I going to go short here? Only need to get 3 points down there. Here's the, by the way, I don't think I mentioned it yet, but these balls are colored by delta. Obviously there is buying and selling happening there, but they're colored by delta. Now where I get confused further confused on this IB continuation story is it's kind of a breakout, right? And typically that has been a no for me, an error code. Actually, I have an error code BO breakout because it's usually when I'm FOMOing. So this is different in that it's the IB continuation trade. Do I think that that's going to be the case? I can safely say I don't know. Kind of looks like it. Looks like I might have missed it. You never know. I think I'm going to be content to keep my eyes on the backtesting story, and got a lot of selling here that didn't get anywhere. 205 contracts taken out against a buy iceberg of 1,060 traded out in that iceberg. That's a lot. Remember, do not lose sight of the fact that this is reportedly the largest expiration or triple witching in several years. There are 4 times a year that this triple witching happens with contract expiration. Which is what it's about. It's when the options and the contracts expire at the same time and roll over. So there's 4 times. That can only happen 4 times a year, right? But apparently the options volume for this triple witching Friday is higher than it's been in years. And now you got real FOMO right here, and boy, you're going to get that IB low, and you got, let's say, short at 59, make it 59.75. All you got to get is right there, and you're stopped out. Now, here's the way I look at this. Under normal circumstances, apart from the IB continuation trade. And the reason why I didn't ever, or I shouldn't say didn't ever, but kind of the reason I developed this philosophy about FOMO and breakout on those kind of trades is it's real important to consider in any trading environment, especially now when I'm saying, contain your risk don't put risk on unless you've got an A+ setup. Just imagine that you got short right here. Okay? Where's your stop? It's absolutely in the middle of this giant pile of crap, right in the middle of all this traffic. And what's happened? You've come back up to it and either taken you out or, certainly got your butt puckered. That is a real bad trade location because your stop is right back within all of this consolidation and all of this traffic. You got short down here, short in a hole they used to call it. And there's all of this been going on. The importance of an asymmetric trade entry location is huge. Quite contrary to a short down here would be the long. What have we been doing? Well, we've been rotating. Outside, well, as Tom would go, outside in, outside in, outside in, outside in being the POC in this case, but on the more, back over here the POC was still up above us, but we were rotating around this big fractal here, building up this distribution. So probably a better trade possibility from a point of view of an asymmetric location is along from down here, because you can put one or two ticks below this level. Been a stop right here, of course. One or two ticks below here and you're out, and you're wrong, and you've got upside potential. In other words, the risk to reward is asymmetrical in favor of the reward. And here we are, back in the chop. This is, my term for this is the retail soup. They are just chopping up these guys that can't stop clicking the mouse. And folks, traders who don't understand the concept of risk to reward, thinking that a 1-to-1 or this, short scalpy kind of crap can pay you out. I have a real problem with that. Mm-hmm. Well, there we are. The Grand Cul-de-sac, the big nowhere. There's no shame in having been stopped out here. I didn't, do that, but the problem is, I think probably a lot of traders would have gone for the following. Context appears down. We took the IB low. VPOC migration lower. In a conventional wisdom would suggest that thing was going lower. And then we got a V reversal. Another one up here. I suppose somebody that's trading these, that's happy with trading 4-point swings is doing this. And not much to say, I don't think. That I haven't said already, Mind your risk. Only take a valid trade which you personally have vetted and the setup for. And then, you rely on the law of large numbers to manifest the expectancy to your bank account. Boom. There you go. That is approaching trading as a business of probabilities and statistics rather than a video game or gambling or whatever. gambling from the point of view of the gambler. Trading is a business of probability and statistics, as is the game theory. Gaming from the point of view of the casino. But yeah, this is like watching paint dry. My anticipation is that this will be a game of exactly what we've seen so far until 1300. Unless some random, unsuspected input comes in, or, news or whatever, some risk that we are not anticipating that interrupts the auction. Who knows what that could be? Everybody's taken a run at this morning. I think all the administration people have had something to say. It's typically who would be, that's typically the only people that would, or the only input to that random risk would be from them. Unless, some totally, war or some crazy thing happens geopolitically. But on the more normal basis, it's been from the administration or their, those associated with it. Independence Day, euphemistically called Independence Day, the largest drop in, I think, since Black Monday, or you know what I mean? Out of no place, and just completely ridiculous shit. I mean, and notice nobody says anything about it. It's like this. It's like the attack force off the coast, within spitting distance of Venezuela right now. Nobody's saying a word. It was big news over a weekend or so, or into last week. Not a word. What happened with all the tariffs? Nobody even said anything about. Any explanation about how the tariff numbers were generated. There are some scholars that figured it out. It was based on the trade balance, the trade balance percentage, not anything else. And nobody said a word about why we're putting tariffs on 2 islands that are inhabited by nobody but penguins, for Christ's sake. That just is. It's crazy to me that kind of thing is just completely overlooked and forgotten about. And the news cycle is so short and so driven by talk about fake news, and anything that anybody wants to have said is said, and it's said with conviction as it is truth or news. It's just the weirdest thing. That's a phenomenon I'm not used to. But I don't think there's anything that's going to happen here between now and 1300. And we could go dropping out of here and take the overnight low and, the naked volume point of control down around 66.44.75, and maybe the 66.49 MCVPOC. Who the hell knows? This is our naked volume points of control. We took yesterday, here's today. We got one just below our MCVPOC down here. We got all these down below us. This is just NASDAQ. Jesus Christ, this is just the ES. Better go back to bed. That's a good idea. Yeah, with the news at 1300, I'm gonna have to reschedule my midday nap, maybe, huh? And yeah, gonna go short again. Gonna take the IB continuation again. Well, there was 1, 2, 3, 4, 5, 6, 7, 8, 9 times. Nine times. And it could fall now and just haul ass down there to the overnight low. The NQ is selling off. They had a pullback, sold off. They had a pullback, sold off, pullback, sell off. We haven't put in a new low yet, but and these bird brains are just haven't done anything. I mean, short of just fuss around here, and now it looks like it's now I'm going to be bummed out that I didn't take the short, the IB continuation. An hour later. Certainly not a time to develop a case of FOMO. It is a bummer though. But I don't feel bad about it because, well, this is hindsight. You know. Okay. There you go. There's the IB. Oh no, it's not yet. Let's get to the IB. Where'd that stat happen? Right there. Okay, so there's the IB statistic. There's the pullback. There's the retest. Boom! We're gonna get short, baby. Wow. Oops. Again, now? How about now? How about now? How about now? You know, that's the problem. That's where hindsight, rearview mirror trading can look. You can look like a star, but do it on the hard right edge, and then we'll talk. NQ's bottoming. S is bottomed back up there. Would have been a test. and a potential trigger. Trigger. Not scaled yet. And where in the hell would they be going? Well, we do have this boy down here. That's pretty important. And here's that MCVPOC from the 12th. Is that correct? Let's check. 66.44.75, and I happen to know. So let's see what we've got here. 66.49. Oh boy. I think it's different. This is supposed to be 44.75. Oh, it is. Oh, there you go. Isn't that cute? I love it when a plan comes together. I'm looking over here. Okay, what a mess. What the hell? I missed the big W. The big 1, 2, 3 reversal. Oh. When I first started trading back in 1999, and then I came to Coconut Grove. I moved from Africa to back over here to Coconut Grove. Because I was familiar with South Florida and like diving and sailing and stuff. I traded with a guy who was very successful. I had a trading site. Those were the days when you had websites and people would log on and you'd have, you know, chat and voice and stuff, but it was way before Zoom or before any of those things, or Discord or any of that, and certainly before YouTube and what we have now. And he was from, I'm trying to think of what his name was. He was in Reno, and he was supposedly an ex-floor trader. I don't know, professional or something, but he was always talking about it. The W. Ooh, there's my W reversal or whatever. He supposedly made a lot of money. He used to have the Maria trade. That's in the days when the only kind of media trading stuff was CNBC. Maria Bartiromo had a thing on every morning before the market opened, and he can maintain that she always had a tell. And if you picked up on that tell, you could always get a tip out of her and make some money. This is when we were day trading equities, the world famous .com bubble. Long time ago. 25 years to be exact. Almost 26. Time passes fast when you're having fun, I tell you. Boy, a lot of water under the bridge since then. Whew. Pretty amazing. So, welcome to the stream. I think it's pretty obvious what we're doing here. This is I'm in the process of vetting the IB trades, IB of which there are two. I've talked about the IB. I think I've talked ad nauseum about the two trades. Also, most importantly, the environment today and the focus on the Fed rate. So, not much else to say. The NQ is trying to drop lower, and typically it'll pull the ES with it, but today, who knows? I used to have a correlated market. I've tried to stay away from any additional stuff. I had several different instruments subscribed up here and whatnot, but I'm trying to keep this book map as light and responsive as possible. I used to track a correlated market with the NQ, which it didn't show, obviously price is not related because of the difference in price, but the directionality of it was interesting, and sometimes that would be a good confirmation. I'm not going to bother putting it on again because I have both, here's the NQ, there's the ES. And there's some things to be said for indicators. I mean, if you're below the 20-day moving average or 20-period moving average, you can be pretty assured that it's a downtrend, that context is down for that period, whatever you're looking at, daily, monthly, hourly, whatever it is. Same way of the 200. If you're under the 200 or over the 200, that's a pretty good gauge for the overall directionality of the market, whichever market you trade. So there's, something to be said for those, and they're just like, if you can't look here and see what the directionality has been for the last however many days that is, since September 2nd, you're blind or stupid or both. Here we are some more. Then we had this big labor non-farm here, and then up we go again. Here was the big non-farm payroll a month ago, back in August, when Agent Orange freaked out and fired the guy and put in his own person, and then of course the numbers were worse over here. So, somebody who had devoted their life and their career to our government was expendable. even though there was nothing, and no fault of his own, I believe. I guess. I don't know. But here's context, right? And here's context again, what is the context? Look at the yearly picture of the NQ. I mean, it's up and to the right, The stock market is up and to the right. Here's all you need to do. Right there. That is an all-time high on the ES adjusted contract put in yesterday. All-time high. Up and to the right since time began for the ES. There you go. In reality, somebody did an analysis kind of that I was reading something about. All of the things we do as, day traders and all this hocus pocus and minutia and squinting in at this and something else that and VWAP, another thing. Over the long haul, if you zoom your time frame way out, it's really hard to beat buy and hold trading. Buy and hold has been phenomenal for a long time. Here's a funny one for you. If you look at the thumbnail for the stream, coming soon thumbnail, the ES price is 42.26 quarter. 42.26 quarter. We are currently trading 66.60 half. 42, 52, 62, 66. 2,500 handles. A one lot at a buck and $12.50. You're looking at over 125 grand. In the space of time that I've been doing the stream. Because I did that, I could look back at whenever I generated that snap. I don't really remember, but I was just laughing about it yesterday morning because I was standing here getting ready for the stream to start, and I have I monitor the stream on one of my upper monitors, I have four monitor rack in front of me and a couple of monitors to the left on my other stand-up desk there. And the top two on this rack in front of me are powered by another computer. As a part for the trading machine, which is the bigger ones on the bottom. And so I monitor the stream and I have it up, waiting to see if it kicks off all right and all that kind of stuff. And I just happened to notice that and start laughing. It's like, Jesus, 2,500 points or something, And I just put on a one lot and forgot about trading. Pretty incredible. Pretty incredible. And here we are back at the middle. What a coincidence. Back at the POC. I guess somebody who came up with that idea knows what they're talking about. The most traded price so far in the session, meaning what should you expect? It to be retraded again. That's pretty much it. Well, what did we do? Oh, yeah, that same thing as same thing as before. Oh yeah, so this is going to be one of those days, boys and girls, where you just need to be real patient, keep your bullets dry, keep your powder dry, keep your clip full, or whatever kind of saying you want to use there. Keep your lead in your pencil. Yeah. Well, I don't feel bad about the fact that I didn't succumb to irrational exuberance. Oh, Alan Greenspan. I wonder if he's still alive. He was a funny guy. I'm not sure really how funny, but he was first-hand up front and personal, but he had a phenomenal vocabulary, and I think was pretty astute, I believe. I'm not sure what his legacy is looked at. But I can tell you one thing. This is one big blender full of retail soup here. I sort of have to stop and think here about what positioning and reaction I would expect to that Fed rate. People who are pretty much more educated and versed in finance than I are talking about buy the rumor, sell the news. I will certainly be flat, and I will be well rested, well fed, well hydrated, and standing here at the ready from about 12:30. That's for sure. And I can sincerely hope that you haven't fallen into the death knell of the retail blender. And if you think can make money out of this environment, I would suggest you better zoom out, look at your trades over a wide sample set. This is ridiculous. Not that it's going to blow one way or another, launch off in one way or another at a moment's notice. But right now, this is just BS and bus tickets. That's all this is. So I guess what I will probably do is up my midday schedule a bit so that I'm back fit and ready to roll for the world famous Fed meeting. I don't know whether I can stream that. I mean, I have it live from either one of the sources there, my news sources. I don't know how I don't know how YouTube feels about that, to be honest with you. I'd hate to have the stream taken down because I was doing that. And if you get a copyright strike, in my case, that's all I can do. Because the way my OBS streams from my mixer here and then from my computer, there's no separation of audio tracks, for example. So I can't I couldn't, split that track off that had the copyright strike on it. And I certainly couldn't do that with the video, so I think I will probably take the path of more sure resistant and more safe to prevent any. I should have looked into that before. I'm sorry that I didn't. You can certainly, grab it anywhere online from the Fed, their own site and channel, from any one of the major news providers, even the news providers that I use both stream it. So we should have absolutely no problem getting that decision live and direct and not jeopardize the stream. So you could do both. So are they going to jam it back down now? Ooh, jam it. Jam it good. Jammity, 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 jammity. I hope you like jamming too. To quote Bob Marley. Yeah. Okay, I'm going to go take care of a couple things here, get outside, get some fresh air, rest my eyes, fill my throat, and be back bright-eyed and bushy-tailed, ready for this Fed announcement. Take a quick run around here. Nothing's changed, right? Ooh, volume is dropping way down to 69% now. We're up to about a 3-point ATR. What's happening in La La Land over here? I'm not sure what this means. Oh, okay. House is going to start using Microsoft Copilot. That's pretty cool for Iran. Might be going to step up and do something. Basically, then we just have to be, we're in the hold until 1300. So nothing new. Nothing new in the zoo. And I will be back in about around the bottom of the next hour in advance of this rate story. Got to thinking the music had probably pooped out, and I'm right. All right, so we got down below that overnight low, and then what happened? We're back up here. Okay. Welcome to and get ready for the world famous FOMC extravaganza. What the hell happened there? Huh. That's pretty weird. Huh. What's going on? Well, that was pretty weird. Huh. Well, I don't want to do that again. So the meeting is only the broadcast or the speech is only going to be, or press conference is only going to be at 1:30 or 2:30 Eastern Standard Time. So we're going to have the number out without any fanfare here. Okay. Notice we've traded just about back to open here. So easy to fall victim to hindsight or rearview mirror trading, you know. I was just standing here thinking, man, why didn't I take this IBC continuation down? Well, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, about 15 reasons right across there why that was all hindsight. Not the best thing to be doing. We're going to have that number out in 3 minutes. Less than a minute. Whoa, there goes the book dark. Look at that. They suddenly lifted off the entire, all the liquidity lifted off the book. This is why you don't want to be in this trade, in the market. Look at this down in here, at these lows, 1s, 2s, 3s. We're going to be 10 seconds. There we go. Yeah. So they gave them their 25% basis, right? They gave them their 25% cut. They are. Now what is it? This is why you don't try to be in it. Imagine trying to manage your risk here. If you were long, then Merry Christmas. Yeah, notice this. Well, so much for the rate cut. It's about, and I would imagine that there's a lot of people that made money on that. I could have, but I'm not going to enter. I just don't think it's prudent to put risk on in that environment. They'll probably try to push it up to a new all-time high now to thank the Fed for this glorious. Boy, and they almost got it down to that MCVPOC. Just one tick above it. Right there, that's pretty amazing, huh? Check yesterday's stream. I said that this all-time high, this is put in the ETH on the 16th, will not hold. These guys will not permit that to happen. They will get it up here, maybe to 80.67 or just above. They'll take that record back. They may pull the rug out from under it after that, but that's something they're very proud about. And I'm not saying today, but I'm saying before month out, I'm sure they'll be out of here. Likely, more than likely, the end of the week. It's got, I'm sure, to do with the options. Volume stayed low. We're still down at 78%, 79%. That's kind of amazing. We did get a pretty high pop in the ACR up here from a low of about 285 to 6. You better be sure you got your direction figured out if you're going to try to trade it. That's the average true range per minute in a 1 minute candle. remember that my risk neutral 2-lot package has got a 3-point stop. So that's twice the swing. Well, I didn't feel any inclination to trade that. I guess that, in hindsight, if you threw on a long back here and just prayed, it would be a YOLO. Would have been great. It would have made out like a bandit, but that's certainly not part of the... I'm sure that there are traders who were positioned and knew what to do there. Maybe longer term, probably options guys. But that wasn't me. Ooh, back down again. Maybe this is the sell the news part here, huh? And Q's falling out of bed here. Oh, look at it go. Oh, I'm so sorry I didn't get short. I wasn't expecting that, frankly. But boy, they are definitely hammering it now. What are we doing? What are we doing? Okay. 10 minutes for the press conference. I'll be listening to this. I'm not going to stream it, but I suggest you go to federalreserve.gov/live-broadcast. I'm afraid, I don't know what, as I said, I don't know what YouTube's policy would be about that, but I'm not going to risk it. Chopping around, baby. That was quite the short, though. Damn, I'm sorry I didn't. I'm sort of like deer in the headlights here. That would have been beautiful, right? 59 to 42, 40-ish. That was more than definitely the 12 points scale. And down you go. That would have been just a lovely way to end off the these 5 accounts. But hey, the market is an endless flow of opportunities. There's never a missed opportunity. It's only the next opportunity. Look at how the market has spread out now. We can't even get the session. Well, maybe can't really get the session wound in properly here. Too tight. Let's see if they'll continue to update. That's the problem with Bookmap, or whatever this is, IRT. Isn't it cute? The little princess. Say hi, everyone, princess. And back we go. Well, there you have it. So what is that Fed? That Fed reaction overall is 86 to 38, 50 handles basically. That's quite a move. Imagine managing your risk in this mess right there. Look at this volatility now as he speaks.
market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply, and we know that because the unemployment rate has ticked up. So, that's what I meant by that.
If I could follow up, every year since 2015, the SEP has forecast that you would hit your target 2 years later. The SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problems for you in telling people that that's what you're going to do if you can never reach it?
Well, I mean, you're right. It does say we're going to get to 2% inflation in 2028, at the end of 28. But that's, that's literally how you put the projections together. You're writing down a rate path, which is designed to create, over the course of the SEP, time frame, 2% inflation and maximum employment too. So that's all that is. No one really knows where the economy will be in 3 years, but the nature of the exercise is to write down policy that you believe would return to the 2% goal over at least by the end of the exercise.
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass-through of the tariffs into inflation has been slower and smaller. The labor market has softened. So the case for there being a persistent inflation outbreak is less. And so that's why we think it's time for us really to acknowledge that the risks to the other mandate have grown and that we should move in the direction of neutral. So what will we do? We'll do what we need to do, but we have two mandates and we try to balance them. For a long time, our framework says that when our two goals are in tension, and this is quite an unusual situation, how do we decide what to do? Because our tools can't do two things at once. What we do is we ask which is farther from, how far is each from the goal and how long is it expected to get to the goal? So, and then we think about those things and we see, as I mentioned, our policy had been really skewed toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market, and so we're moving in the direction of more neutral policy.
How concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market, and obviously we think it's appropriate that we reduce our rates so that we become more neutral, which presumably will be better for the labor market. You see people who are sort of more at the margins, so kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment, and the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve Leisman, CNBC. Mr. Chair, in the past, during rate cuts, you used the word recalibration. And I wonder if you pointedly did not use it this time. And in fact, when you said policy is not on a preset course, did you mean that as sort of the opposite of recalibration? Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
You know, it is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that. But it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss, we have a great discussion, and then we decide what to do and we act. But you're right that it's a wide dispersion of views, and I think that's understandable and natural in the current situation.
Hi, Victoria Guida with Politico. You've talked a lot about Fed independence and the importance of it over the years, but as markets have questions about what exactly President Trump's intentions are with the Fed, what would you point to as the things they should be watching to determine that the Fed is still making decisions based on the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So, you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe we'll ever get to that place. I would say we're doing our work exactly as we always have now, and they're making their arguments, and we're having really a great discussion around these challenging issues. So,
do you see the court case around Lisa Cook as being related to questions of Fed independence?
I see it as a court case that it would be inappropriate for me to comment on.
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is, for the last bunch of quarters, there's been almost a predictable overcount. And I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth-death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded, and it's just really hard. You can't survey for that. You've got to have a model that predicts that, and it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've been working on that and are making progress on it. But the data we get is still well good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data. And the way to get that is to make sure that the agencies that collect the data have sufficient resources to drive higher response rates. It's not a complicated problem, but that's what it takes. It's not a mystery. That's what it takes. The other thing I'll say, Edward, is in the case of the job creation, the response rate is quite low for the first month, or lower for the first month. By the time you get to the second or third month, you're still collecting responses for that last month, for that prior month, and you get to the place where the data are much more reliable by the second and certainly the third month. So it's not that we don't get the data, it's just that we get it a little later.
But for the benchmarks, if that holds, it's 51% of the jobs that we thought were there weren't really there. Shows a weaker job market coming into this year. If you had that information, would it have changed your mind related to where the interest rates should be? Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. So as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I hadn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter, and I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that. You see minority unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
As a follow-up to that, the growth mix right now seems very concentrated in investment and on the consumer spending side in the higher income groups. Do you feel that that's an unsustainable mix for the economy moving forward?
I wouldn't say that. I mean, you're right. Those are two. We're getting unusually large amounts of economic activity through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending. So, I mean, I think the economy is it's moving along. Economic growth is going to be 1.5% or better this year, maybe a little better. Forecasts have been coming up, as you can see. So, labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So, that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework. I would say there's a lot of work going on behind the scenes around the assets we have in the Federal Reserve system and at the board. Are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks. The employment at the Fed at the end of that will be basically at the same level it was more than 10 years ago. So we will have had zero job growth for more than a decade when we're finished with that, and I think we'll probably do more than that. So I think we're certainly open to constructive criticism and ways to do our jobs better.
But not an independent review?
We're certainly open to always trying to do better.
Mr. Chairman, Neil Irwin with Axios. There's been some debate lately on whether AI is already starting to affect the labor market in terms of lower labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
So there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college are able to use AI more than they had in the past. That may be part of the story. It's also part of the story, though, that job creation more broadly has slowed down. The economy has slowed down. And so it's probably a number of things. But yeah, it's probably a factor. Hard to say how big it is.
Thanks, Mr. Chairman. What evidence do you see of tariffs showing up in inflation?
Well, if you can take goods, just sort of the broad goods category, and last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was, goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, I mean, analysts have different views, but we think it's contributing, 0.3 or 0.4, something like that, to the current core PCE inflation reading, which is 2.9%. So it's contributing. What seems to be happening is that, the tariffs are mostly not being paid by exporters, mostly being paid by really the companies that sit between the exporter and the consumer. So if you buy something and you sell it through retail or you use it to make a product, you're probably taking a lot of those costs on and not able to pass it fully along to the consumer yet. That appears to be what we're seeing. All of those companies and entities in the middle, they'll tell you that they have every intention of passing that through in time, but they're not doing that now. To the consumer, the pass-through has been pretty small. It's been slower and smaller than we thought. But the evidence is it's very clear that there's some pass-through.
I also wanted to ask if you could share with us the conditions under which you might consider leaving the Fed in May.
I have nothing new on that for you today.
Hi, Katerina Saraiva with Bloomberg News. I just wanted to follow up on one of your answers just a couple minutes ago. We've often heard you talk about how you and your colleagues, do not think about politics. This does not enter the room. But one of your new colleagues does come from this world, right, where everything is seen through this framework of politics and of what party is being helped, and that person is still employed by the White House. How can markets and the public interpret, some of his speeches, for example, and then some of the forecasts that we see today? I mean, the median for this year was moved because of the introduction of his forecast. I'm talking about the number of rate cuts seen this year. What do you say to markets and the public that are trying to interpret, what you guys are saying?
So there's 19 participants, of whom 12 vote, as you know, on a rotating basis. So no one voter, can really. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's really all that matters, and that's how it's going to work. And I think that is the way the institution. That's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is, and what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us, and we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, which is those are our two equal goals. And you will see that there's a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.
Thank you. Archie Hall from The Economist. You mentioned earlier that job creation was running below your guess at its break-even rate. I'd be curious to hear a bit more about that and where you think the break-even rate is.
So there are many different ways to calculate it, and none of them is perfect. But it's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly. And that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point. And that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up outside, just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Follow up, if I may. You mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PC numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in, and it's a good bit from consumption. It looks like consumption was stronger than expected, what we got earlier this week, I guess. And also we're getting, a fairly narrow sector is producing a lot of economic activity, which is the AI build out and business investment. So we watch all of it, and I would say we did move up. The median for growth for this year actually moved up in the SEP between the June and September SEPs. So, and really the inflation and labor market didn't change much. It's really the risks that we're seeing to the labor market that were the focus of today's decision.
Nicole. Hi, Nicole Goodkind with Barron's. Thank you for taking my question. Given the cumulative impact of high interest rates on the housing sector, I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth accumulation for a segment of the population?
Housing is an interest-sensitive activity, so it's at the very center of monetary policy. When the pandemic hit and we cut rates to zero, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that, and they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry, and so rates have come down a bit, and as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates. And that has been happening, and that'll of course raise demand. Lower borrowing rates for builders will help, get builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for it to matter a lot for the big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing for people, and all of the areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up, during the last SEP, or the press conference following the last SEP, you seemed to indicate that policymakers lacked conviction about their projections, and I'm wondering if you still feel that way.
Forecasting is very difficult even in placid times, and as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast right now. I think they'll honestly say no.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. If you're cutting rates, why continue to reduce the size of your balance sheet, then pause the unwinding?
Well, I think we're cutting the size of our balance sheet quite marginally now. As you know, with the balance sheet, we're still in an abundant reserves condition, and we've said that we would stop somewhat above an ample reserves level. That's where we are, and we're getting closer to that. We're monitoring it very carefully. We don't think that has at all significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large, so I wouldn't attribute macroeconomic consequences to that at this point.
And at his recent confirmation hearing, Stephen Myron brought up that the Fed actually has 3 mandates from Congress, not just jobs and stable prices, but also moderate long-term interest rates. So what does Congress mean by moderate long-term interest rates? How should we understand that when we see the 10-year Treasury moving? And how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability, for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN. We recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards. How concerned, if at all, are you about the health of consumer finances, and do you expect today's cut will help?
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have a visible effect on that, but over time, a strong economy with a strong labor market is what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs, and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
We're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, I would say it's a mixed picture, but households are in good shape, banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Jean, we'll go to you for the last question. Hi, Chair Powell. Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
So as you said, shorter-term inflation expectations have tended to respond to near-term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer-term inflation expectations, both break even in the markets and almost all of the longer-term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that we need to continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. We're, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals, and so we have to balance those two. When they're both at risk, we have to balance them, and that's really what we're trying to do. Your latter part of your question was about independence. I don't see market participants. I don't see that that's something they're factoring in right now in terms of setting interest rates. Thanks very much.
And so that's the Fed. They got their basis point cut, and I guess all the morons are happy. This new Fed guy is trying to be interesting that he is still not. He's still on the payroll at the White House. That's pretty surprising. But I would have thought you'd have to quit any other positions in order to take a position with the Fed. That would have been my suspicion. And that pretty much takes care of it, I think. So we are approaching the bottom of the hour. What a busy day. Look at that. $86 to 10, so 75-point swing. And they continue to swing. Oh no, to 10, right, exactly. 70 handle move on the ES. And certainly not something I'm going to be involved with. There's our day. Amazing, huh? Took out a lot of rusting or oops, naked volume points of control here. Took out a couple of them anyway. No, only one. And this one from yesterday. So we're fast approaching the bottom of the hour, headed up for the close at 1500. A disappointing day for me, actually. These days are becoming trying for me. Look back here at obviously in the rearview mirror, I can see all kind of opportunities I should have taken. But not in this ridiculous environment. Let's just see what we've got here. Well, just ought to tell you something. Look at the ATR. See if I can figure this out here. Wow, 21 handles. We went from 3 to 21 handles. So, you think you're a big shot? You're gonna trade that? And 119% volume. Yes, sirree, Bobby. That's a pretty big one. Pretty amazing. So we're around the final curve, where the next thing we've got on the docket here is going to be market on close imbalance, and that's going to be kind of a nothing burger, I would suppose. Don't forget, however, that this was a huge day, no question about it. I hope you were minded that you were account risk was first and foremost, and you managed that properly. But remember, tomorrow is another small economic initial jobless claims, I think it is. And Friday is huge. It's the triple witching and the biggie. 4 times a year we have contract expiration, and that means one of the largest expirations that there is. Continued jobless claims. Yeah, initial jobless claims is out at 7:30 tomorrow morning. And then Friday is going to be the big one. Friday is going to be oh wow. Google and PayPal just announced a partnership. PayPal is going to partner with Google Cloud. Wow, PayPal just took off like a rocket. I wonder how much of that Musk still owns. Maybe he doesn't own any of it anymore, I don't know. So mind your risk for the rest of the week. Today is disappointing for me. I should have gotten something off of this, I guess. I'll have to think about this. This will be one to replay, but the problem is when you something so dramatic, it's hard to replay. To trade it in replay in recent, this weekend or whatever, it's still going to be pretty foremost in your mind, in my mind, and to have it be really unbiased. So therefore, I'm not going to say anything about it as far as a mistrade in the journal or anything like that. And we're going to be having that market on close imbalance at the top of the hour. And then I've got to focus on getting things organized for our daughter to college, to school. So here we are. The daily recap here should be pretty plain. Fed rate decision. Come on, man. Pretty much in the holding pattern from the open, and bam. Now, basically 70 points, 75 points. Move here. The basic rate decision and the speech was a lot more dramatic. And where did we end up? Almost exactly where we started, right back at the scene of the crime. And if you want to really laugh about it, we are trading just almost on the open. So we have had this entire day amount to nothing. Pure speculation. I'm not saying it's going to end that way, but you know, that's what can happen in the market. So we've took out some naked volume points of control here, 1 or 2, and the micro composite VPOC. This day looks like it's going to end up pretty much on a doji. Here's our market profile. Look at this string of singles down here and back up again. Yeah, it's pretty random. And we're off, you know, we're off. We're at 0.09% change down. At one point we were way down there. The volume numbers and stuff are pretty striking. We've jumped up to 123% earlier. Going into the number, we were at 69% volume. And our ATR went from 3 up to a high of about 23.4, 23 and a half. This is based on 1 minute. So that's the rate of the average true range, how it expanded through the course of that episode. Pretty amazing. News-wise, what else can I say? This is pretty big news. PayPal and Google have struck a deal. That helped PayPal out a lot. Tomorrow we have, don't forget that tomorrow we have continued jobless claims and initial jobless claims. The unemployment is getting worse. We just heard that in the FOMC speech. And Friday is the huge triple witching. Big volume. There's that. We'll have our market and close orders here in 8 minutes. They'll pop up over here and they look like this. This is from yesterday. You read these as follows. This is 1,341,000,000 buy-side contract imbalance on the S&Ps, and then 1,937,000,000 buy-side imbalance on NASDAQ, and the rest is history down there. That's how that works. This was kind of interesting yesterday, right at going into the close, just before the close, we had 1,201 contracts sitting out here at 66.75 in the book at 12:59. So there we go. And they're looking for another projection of more rate cuts before the end of the year. They've got one more meeting after this one, or two maybe. I don't know. I don't know if they meet in December or not. Oh well, we have October and November. Okay, the football. Yeah. So that's where we are there. From a point of view of the market, then. Oh, let's jump back here. Today's activity. But it's pretty, it's really important to notice that we're going to open we're going to close. If we close right here, right now, we went exactly no place all day. No, it would be unchanged. If you look over here, even clearer. There's the open. And there's the close. Now, if we quit the market right there, what is that? Exactly on yesterday's close. So it's been pretty dramatic order flow and price action, but the market didn't go anywhere. Didn't gain anything, didn't lose anything in terms of value of the S&P. So we have that, and let's get over here to the book map. Remember that this blue line is just a visual reference for me, specifically, personally. I put it at the session start, so I can make sure that glancing out of the corner of my eye that I have all of the session in view here. And you see where we were and all the back and forth and tussle that went on until bam, there was the rate release. So we went from a high of about 86.5 down to about 66.10. 75-point move. And here's our open. And here we are. Always tickles me. We don't have any huge liquidity here. The stream had some real nice example of what happens when the book goes dark and they pull all the liquidity, shut off all the bots, going into a number right over here. This was 1s and 2s and 3s. And yeah, we're going to have the 5 minutes or 4.5 minutes. We'll have the market on close orders and not really much to say. Tomorrow we've got initial jobless claims, and Friday is the triple witching. So, yeah, hook in and hang on. It's going to be a fun-filled, exciting week. I'm disappointed that I didn't clean off these 5 accounts here with all of this market action, but on the other hand, my strong belief is that there's a very, very important, the primary motivation or the prime directive of a trader is to preserve your account and manage your risk. And you do that by managing risk. And I am not confident enough, or I have no vetted trade that says what to do here. In this market condition, yes, this is an IB. This is one of my 2 initial balance trades, which I'm vetting, and I've got one more trade to do, and thank God I'll be done with that. Is the IB failure, which would be come up here and revert back, or the IB continuation, they come up here and head down. And yeah, in the rearview mirror, absolutely you can pick them out. Tell me after you just saw this that you're going to think, okay, I'm going to go short right here because this is going to go down. You could have thought the same thing right here, and then that happened. So the rearview mirror is a real convenient spot for internet guru guys, and it's a real big trap to let yourself fall into, I believe. And we got about 2.5 minutes till the MOCs, and then I'll wrap the stream up at 1500 as usual. Please come, smack a thumbs up, say hi, drop something in the chat, and be back tomorrow. Subscribe, that'd be great. Put the little bell thingy so you know when it's going to happen. And every morning at 8 o'clock, every trading day at 8 o'clock, I fire off the stream, which is my virtual journal. And it runs the entire day until 1500 till the cash close, which is to provide complete transparency and accountability. Absolutely no trades are taken off on this account, and by extension any of the others, because it's copied from this one off of the stream. So there you go. And there were the market on closed orders, and I was doing something else. As I said, I didn't imagine much would happen. So we have 840 million buy side S&P, buy side NASDAQ, sell side Dow, buy side Mag 7. Boom. There you go. Well, I will be diving into the backtest journey here. Boy, I'm really over this vetting. This vetting process is a lot of work, and it's frustrating. And it pays off, but it's definitely not the fun part. You know, they say that luck is when opportunity meets preparation. There you go. There's a good one for you. Ooh, minus 2% change. All right, 3 minutes, and then I gotta switch over to soccer dad mode here and get breakfast going and stuff like that for, or well, food for our daughter. And then I'll be back to backtest dad mode. Backtest guy. And back in the morning at 0800 like normal. And I'm trading, by golly. I am really sick of this just standing around deal. Standing around narrating and watching is frustrating, boy, I'll tell you. Yes, I could have probably taken something here. There was no trade to take through here. And, you know, how are you going to do this? Yeah, if you want to gamble, you throw a long on. Merry Christmas. It's a 50-50, right? Remember that the outcome of the next trade is 50-50. So if you just want to gamble, then that's what you could do in these kind of situations. But I don't want to do that, nor do I want to reinforce that in myself. So we got a minute to go, and I will be able to take off the glasses and step back here. Wednesday, the 17th of September. Big day. I hope I don't get any crap from YouTube about having the Powell speech streaming there, because I thought that was important. I would like to have that be a record for posterity. And we got about 30 seconds, boys and girls, till that cash close. Now that you see the liquidity starting to jam in along here, they're going to fill in fast. Ten seconds. Now the cash close does have the curve trade that's about 15 minutes, and then the market fluffs around here for another until 1600. So remember, the stream is at 0800 in the morning, and I'll be there for the pre-market, the reports, the numbers, what we think is going to happen with this trade. And here we are scooching our way back up. There's 1500, and we're almost right back to the open. Isn't that cute? That's pretty funny, isn't it? All right, so have yourself a great evening. Get away from the screens, get some exercise, Remember that your mental health and your physical health is way more important to trading than your screens and your charting and all that stuff. Because if you're not firing on all cylinders, you're not going to have a successful outcome. If you're on tilt for any reason, be sure you're aware of that. Be well hydrated. Get some exercise. Have yourself a great